In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. I do post these videos daily, so I highly encourage you to double check the latest videos so that way you have the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. Tomorrow is a pretty big day because we had the FOMC Fed interest rate decision coming out, plus Fed Chair Powell speaks in terms of press conference as well as tomorrow. But first, for Wednesday, July 31st, 2024, which is tomorrow, 8:15 a.m. we have ADP employment. 8:30 a.m. we have employment cost index. At 9:45 a.m. we have Chicago Business Barometer PMI. 10 a.m. we have pending home sales. And then at 2 p.m. we have the FOMC Fed interest rate decision coming out. And at 2:30 p.m. we have Fed Chair Powell press conference. Now, it was pretty much after the trade of Tuesday. We had Microsoft come out with earnings, and the stock has dropped after hours, and then AMD did well, it has jumped up quite a bit after hours. And the reason why I'm mentioning this is because they're somewhat, Microsoft's a heavy hitter, and then AMD is not necessarily a heavy hitter in terms of mega cap stock and all that stuff, but Nvidia is, and Nvidia kind of went up after hours as well in terms of reaction for AMD positive earnings, right? Because we have Nvidia earnings coming up soon, within I think less 2-3 weeks kind of time frame, so sometime in August. So because of that, you could assume that the markets might get pulled up a little bit. The only thing is though, is I think the market is unsure exactly what the Fed will do. From what I'm hearing, like for example, if you look at some of the business news, the market seems optimistic that the rate cuts will actually come sooner than later. And I'm a little bit skeptical about that because the PCE inflation numbers, which is regarded as more accurate versus the CPI and PPI inflation numbers, previously, if you look at the core PCE numbers, which the Fed predominantly looks at the core, I know they analyze all data points, all that stuff, but predominantly the core PCE number, which has energy removed, previously was 2.6%. And expected was 2.6, and it came out as 2.6. But the media was kind of showing the 2.6 as in not the core PC, and previously was 2.6, expected was 2.5, and it came in at 2.5. So therefore showing to the markets that inflation is coming down, when in reality, if you're looking at the core PC, it's not really coming down, it's just staying flat. And if you go with the narrative of the media, then you would assume that the Fed will cut interest rates sooner rather than later. But if you're looking at core PCE, I would be personally skeptical. It's not guaranteed if it's clear. So the reason why I'm stating this is because the market could technically be set up to think that the Fed will cut interest rates sooner rather than later. And if that is the case and the market is going with that narrative and then yet gets disappointed and again, this is kind of a big if, and this is just my opinion, so please do own due diligence and research before buying and selling. But if the narrative, that is the narrative, and then the Fed comes in and saying, no, it is going to get delayed further, and we're assessing the data as it comes in, because mind you, inflation number currently as of June 30th, I think was at 2.97%. I had it pulled up the other day on the video, and the target for the Fed is 2%. So to get to that target in terms of the Fed calculation / direction of way to combat inflation, it would not be to cut interest rates sooner rather than later kind of thing. So it depends though. Obviously we can't see the effects once they cut the interest rates right away. It takes time. So but the thing is though, because the interest rate came in at 2.6, or not, inflation number came in at 2.6, expected was 2.6, and it came in at 2.6 for the core PCE, then technically cutting rates right now is not the way to go because there's no progress. Again, this is just my opinion. So there's that. But for the time being, in terms of the movement of the market for the S&P and Nasdaq, it looks like they're trying to go up to the upside. Unfortunately, I don't think they'll make it. Now, to assess the movement of the markets kind of a little bit before the Fed FOMC interest rate decision comes out is almost, I would say, predominantly useless, just because once those numbers, the decision comes out, the market will react to it, right? So you can't really predict it fully. But in terms of based off MACD lines, and that's the way I assess the movement of the market, they basically show you if you're in a bearish or bullish movement. And based off the MACD lines, the S&P and Nasdaq seems like they want to go up. I don't think they'll really make it. And the Dow Jones is more predominantly pointing to the upside, right? So the Dow Jones almost seems like, yeah, if the decision comes in, it's not favorable, it basically could dip down and probably will dip down, but it won't dip down as much as the S&P and the Nasdaq, right? And like you could see, like for example, it was up 0.5% today, as opposed to the Nasdaq being down over 1% and then the S&P being down over basically about 0.5%, right? Mind you, the volatility index is rising up, so the volatility index rising up kind of shows a little bit more to the downside, but we'll see. So first I'm going to go through the S&P 500, and I'm going to be looking at SPY, which is an ETF for the S&P 500. So same thing, just different ratio. Mind you, closed at $542 exactly. And in terms of movement, if we were to go to the upside first, so I'm going to cover the upside and then I'll cover the downside. So if we were to go to the upside, basically we're at the limit right now anyway. Like I said last time, we had resistance, support, yeah, obviously some false breakouts, but there are actual clean touch points on this line. And then again, support, like for example, I'll zoom in, you can see one right here, clean touch point right here, clean touch point right here, couple touch points right here, clean. And then right about here, we're pretty much approaching it to the limit, and that limit is basically about $453 and some change. That's going to be a little bit difficult to pass, but I don't think it will be an issue because again, AMD is kind of carrying the market, or not AMD, but AMD catalyst for NVIDIA. Well, so we could be going up before, I'd say before lunch trading hours, and then after lunch trading hours, the market could probably potentially be coming down for anticipation of the decision for the Fed, right? But if we were to go even higher, which I think it will, like there's a possibility. So I'm not saying 543 is the limit. So the next level we're looking at in terms of resistance would be about this level, about $445 and some change, which coincidentally hits the moving average as well. So again, that's $445 and some change, or sorry, $545 and some change. And then the next level is this downward trend resistance line. Technically it only has two major touch points, but if you think it's going to be in play, you're looking at $546 and some change. And then the next level would be horizontally with this, where there's a couple touch points, 1, 2, and then 3. I believe there's a support touch point right about here, yeah, and then support as well. So you're looking at $548 and some change. Then the next level is 550 and some change, and then the highest, in my opinion, for tomorrow's trading day would be 551 and some change for the upside. Now this is for the upside. What most likely will probably happen, in my opinion, is we're probably going to hit the 545 and some change, maybe get to the higher levels where it's 546 and some change with a downward trend resistance line, which coincidentally horizontally is, I see some resistance anyway at that level, but 546 and some change would be the highest in my opinion, and then starts trickling down to potentially maybe 538 and some change within the zone, 538, 537 and some change, like we've seen a couple times here, a little bit here, but ultimately start heading down to this level that I've been, I think, communicating for the past week or so, that the market, specifically S&P and Nasdaq, are showing potentially downside as opposed to the Dow Jones. Dow Jones has been showing upside. It was back and forth, but predominantly upside. But yeah. So this level is what we're looking at is 531 and some change. It could dip down to 530 and some change, but essentially the 531 and some change. Can it go lower? Can it go higher? Obviously it could, but these are the levels I'm looking for. Now for the Nasdaq, I'm going to be looking at QQQ, which is an ETF for the Nasdaq. So same thing, just different ratios. And I'm going to cover the upside first. Again, that potentially could be the play. So the first resistance level, if we were to go up, mind you, we closed at $457 and some change, would be pretty much predominantly around the $465 and some change, and then hitting the moving average plus horizontally right about there, 467 and some change. And then the max of those levels right about here, these top spike ups, plus with the slash consolidation, a little bit spike up past the 2010 upward trend resistance line that I've shown in the past. So I'll quickly show it right about here. This is the line that I was pointing at, upward trend resistance line dating back since 2010. And to get back into the chart, so that was where we broke off, and that level is pretty much, give or take, about $467 and some change, give or take. Now the next level, and I think that would be the max for, in my opinion, for tomorrow, unless obviously the numbers come in favorable, not numbers, but if the decision is to cut rates sooner than later, then we'll see the higher levels for sure. But the downward trend resistance line, meeting it and all that stuff. Oh, by the way, I don't know if I mentioned, but the moving average is about 467 and some change as well, coincidentally with the horizontal resistance. But 470 and some change would be the downward trend resistance line limit, so 470. Could we go higher? Obviously we can. I think the next level would be pretty much about the 474 and some change, which goes horizontally where it's the support levels I see multiple times hit. And then the moving average as well would be about 477 and some change, which hits that 2010 line at the 478 and some change. But I think what, in my opinion, will happen is if it were to go max out, it would be pretty much going about 467, 468 range for the most part, maybe 469, 470. This is before the decision making, right? After the decision making, it could go higher. But then if it gets pulled back, and even if 465 might even be very difficult to pass anyway. But on the downside, if the decision is not favorable for the market, then we're going to start seeing the lows dipping lower than 452 in my opinion, and getting to this channel right about here. So this channel ranges anywhere between $448 and some change to $433 and some change. So we see multiple times it was support, then we saw resistance, support, and then resistance as well. So I think ultimately be heading down to that channel. Will it hit the bottom of the channel? I don't think so, not necessarily personally, but I think over time, basically, if the decision is not in favor, if the market does not favor the decision, we'll get within the channel, and then maybe the day after we might, or the next 2 trading days after, we might see the bottom of that channel, which is about 433 and some change. But again, hard to determine the direction fully because we have to wait for the decision. Now for the Dow Jones, it is showing upside, which is kind of surprising because the S&P and Nasdaq are not necessarily, they're trying to go to the upside, but they're not, they don't have that much pointing to the upside based off MEC lines as the Dow Jones does. So if we were to go to the upside first, covering that, essentially, mind you, we close at 40,743 points. The next level we're looking at is pretty much where it was the previous all-time high / consolidation level first. Actually, not that, but since we're at 40,743 points, the next one obviously is going to be the clean point, which is about 41,000 points. And if the after decision making, the market's in favor of the decision, and so on and so forth, then we'll easily pass 41,000 in my opinion, potentially, and go to the next level, which is about 41,200 points, give or take, plus or minus, like a few points, right? And then the previous all-time high was about 41,365 points, give or take, and that would be difficult to pass, in my opinion, unless the decision, the market is extremely in favor of the decision, right? Now, most likely what will probably happen is get close to 41,000 points, or if not touch the 41,000 points, start heading down before 2 o'clock, potentially, if not beforehand, right? And then get to this level of potentially support if the market is not in favor, and get to the lower levels. So we're looking at pretty much about 40,379 points, which kind of hits the moving average as well, about 40,400 points, give or take. Then get down to the even lower levels, which, yeah, there's a bunch of support on the way, but ultimately head down to the moving average potentially, which is about 39,794 points. So almost 39,800 points, give or take. And that's basically it. We have this upward trend resist line / potentially support levels dating back since 2021, in case you're new to the channel, haven't seen it before. So upward trend resist line, multiple touch points, and so on and so forth. But that's basically it for today's video. Thanks again for watching. I do appreciate it. If you found this beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. And I do post these videos daily, so I highly encourage you to follow / subscribe if you want to be notified when I upload the next video. Thanks again for watching, and I'll see you guys next one. Take care. God bless. Peace.